All right, so here's exactly how I day traded today. S&P 500 is what we're day trading. This is micro ES specifically. With this little dotted line here, this is the beginning of today's day trading session. This is the New York session. Only indicator I'm using is the VWAP line. No modifications really made to it at all. We start off in the 5-minute time frame. We find the first 3 5-minute candles and we put a box around them. You could do this on the 15-minute time frame as well, and what you could do is you could just put a box on top of the first candle, really. That'll be the first 3 5-minute candles put together from the top of the wick to the bottom of the wick of that first opening 15-minute candle, and this is going to be our opening range. The next thing we do is we wait for price to break either below or above the opening range. Today it breaks below it because we have a candle print and close its body below the opening range. We also are going to notice that price is below the VWAP line as well. So these are two bearish indicators that price is heading downwards. The first thing that I look for when price is heading downwards is a continuation setup, where we can trade price as it's continuing to the downside. It would look something like that. But if I don't get this specific setup and price continues to fall without seeing it for 30 or more points, and just for reference, 30 points is right about here. So price fell even further than that, probably about 40 points or so it fell below the opening range, below the VWAP line, without a continuation set up to the downside. Well, then I'm going to be expecting a reversal. And today, a textbook reversal came about. So the first thing that we do is we wait for a sign of reversal. And these two consecutive bullish candles to the upside is our sign of reversal. After the sign of reversal, you need a pullback. All of these candles here are considered that pullback, but we want to have at least 2 consecutive bearish candles within this for it to be considered a pullback as well, and we get that in multiple instances here. The next thing we need is a confirmation candle. A confirmation candle is going to be a large, powerful candle to the upside. It's usually going to be larger than the most recent candle printed. And it's usually going to have fairly small wicks on both the top and bottom, or no wicks at all in the direction that it's heading in. And it's going to have a fairly full candle body. This candle is what I mean when I say a confirmation candle. So no wicks at the top, which is a really good sign. Fairly small wicks on the bottom, fairly full candle body, larger than the previous candle printed by quite a bit. So this is our confirmation candle, and this is the candle that we enter on. We're trading price reversing back up to the opening range and VWAP line area. So on the close of this confirmation candle, I would enter long. My stop loss would be set at the bottom of the pullback, which is 10.25 points. My take profit would be pulled up to make it a 1 risk to reward ratio trade every single time. And in this case, there was no need for risk management because we didn't have any candle bodies come back into and close in the stop loss area. So it was really just a straight shot from entry to take profit, which is always really nice. So this is a textbook reversal long, and I risk 1% of my account on this trade. So I've earned myself 1% today. That's a 1% win. This is the only trade I've taken in the day, and I only take one trade every single day. That's about it, guys. With that being said, I'm going to see you guys all tomorrow for another day of day trading.